Business has always been about turning a profit, making money. But can it stand for something more? Something beyond dollars and cents? We think so. We think that today, business has a higher calling, a purpose to be fair and just, to do right by their workers, customers, communities, and the environment. And it turns out companies successful doing that also do better for their bottom line. When you see the Just Capital seal, it means this company is a force for good. Visit justcapital.com to learn more.
And good afternoon. We are doing it live right here at the 4 o'clock hour, right down to business here. Mottek On Money, live on the air on 790 KBC, streaming live online worldwide at kbc.com, and the on-demand Mottek On Money podcast at kbc.com, Apple, iTunes, YouTube too, by the way, and all your favorite podcast platforms. Big day for the stock market, a well-fed rally. All three of the major stock market averages are at record highs. In fact, they achieved this for the first time together in more than 2 years after the Fed repeated the prospect of 3 2024 rate cuts. The Fed's decision to keep 3 rate cuts in place for this year while projecting continued economic growth through at least 2025 set off a big rally. The Dow coming in for a closing gain of 401 points, settling at 39,512. Yep, blowing past 39K here, and we see the S&P 500 of 46 at 5,225, and the NASDAQ rose 203 points and settled at 16,369. The last time all of those major averages hit record levels on the same day was back in November of 2021. Setting off this enormous rally today, Fed Chairman Jerome Powell in the spotlight after the Fed decided to hold the line on short-term interest rates. He said the elevated inflation readings in the first 2 months of this year supported the Fed's cautious strategy. Powell and others have said they wanted greater confidence that inflation is slowing toward the 2% Fed target before cutting interest rates. They didn't gain any confidence from the January and February reports on consumer prices because both came in hotter than expected. The first rate cut, by the way, is unlikely now until at least June. However, after the elevated inflation readings, we'll have to stand by for the next reading. All of the takeaways from the Fed's policy update, which came along with the statement, along with the decision today. One of the biggest is that the Fed policymakers appear to be settling into a position of accepting somewhat higher than normal inflation, according to some analysts. Also, a tight labor market has always been seen by the Fed as a potential inflation threat, but Chairman Powell does not appear all that worried anymore at this point. Financial stocks, by the way, in the S&P 500 on track to close at record highs today for the first time since January of 2022. Gold showed initial little reaction in the immediate aftermath of the Fed's decision, but then we see gold moving higher in after-hours trading in record high territory after the Fed's decision today. We saw the Fed keep its benchmark rate unchanged at a range of 5.25% to 5.5%. The yield on the 10-year note eased slightly to 4.27%. That's the one that impacts fixed-rate mortgage rates, and I'll discuss that later this hour with Jeff Lazarson, president of MortgageGrader.com and Orange County Register real estate columnist. Breaking news here in after hours, the Justice Department says the Wall Street Journal is saying the Justice Department could file its long-rumored antitrust lawsuit against Apple as soon as tomorrow, according to the Wall Street Journal. That lawsuit, expected to be filed in federal court, would accuse the tech giant of blocking rivals from accessing hardware and software features of its iPhone. The Justice Department has sued Apple for antitrust violations twice in the past 14 years, but this marks the first case claiming Apple illegally maintained its dominant position. The Justice Department opened its latest case versus Apple in June of 2019 under former President Trump, though it initially emphasized its cases against Google. Shares of Paramount Global moving nearly 12% higher today on reports that private equity firm Apollo Global Management has offered $11 billion to buy the media conglomerate's film and television studio. The potential acquisition reported by the Wall Street Journal cited people familiar with that situation. Apollo's bid, coming as an independent committee of Paramount's directors, is now reviewing another offer from Hollywood production company Skydance Media to merge with all of Paramount, which owns CBS, Nickelodeon, other TV networks. Paramount Studios Holdings have reportedly drawn interest as an acquisition target from a number of companies, including Netflix, who have pursued the studio behind classic films The Godfather and more recently Top Gun: Maverick, according to the Wall Street Journal. Will there be a Reddit rally tomorrow? Reddit, the popular news aggregation social media site, pricing its initial public stock offering at $34 a share this afternoon at the high end of the expected range of between $31 and $34 a share. At that price, Reddit, according to MarketWatch, would be valued at $6.4 billion. Reddit raising $519.4 million from the sale of nearly 15.3 million shares. Other Reddit investors are selling an additional 6.7 million shares through the IPO. Shares of Reddit expected to start trading tomorrow on the New York Stock Exchange under the ticker symbol RDDT. The National Public Interest law firm, the Pacific Legal Foundation, has sent a cease and desist letter to the LA Zoo for what the foundation says is the zoo's discriminatory hiring process because it discriminates against applicants based on their race. I'll discuss that later this hour with Jack Brown, attorney at the Pacific Legal Foundation. But first, on your money, the markets, the economy, this big rally today, stocks at record highs. Joining us live now, investment expert Jonathan Hoenig, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan Hoenig, break out the champagne. Great to have you with us here this afternoon.
Great to be with you, Frank. Good afternoon. Yeah, look, I think there's tremendous opportunity. As we've talked about for quite some time, all-time highs tend to beget more all-time highs. And the trend continues to be up, despite the fact that the Fed is promising rate cuts down the line. Truth is, rates are actually going up. I think that's the thing that's most bewildering, Frank. I mean, just look at the 5-year yield, for example. I mean, it was under 4% in January. It's nearly 4.3% today. So, the market itself, in fact, a lot of indicators are suggesting that, in fact, perhaps inflation isn't under control. Probably top of my list is gold, as you said. I own it for my clients over at capitalispig.com. I think you can own GLD at these levels. And the fact that gold is at all-time highs, international stocks are now, in fact, outpacing U.S. stocks. And even gasoline now is almost at 24-week highs. To me, suggests that inflation simply isn't dead. And once again, you could see the Fed behind the curve.
We did see gold also kiss a record high today, along with the stock market. What do you see there? And the rest of this big picture here today, a pretty broadly based rally with the financials also participating today.
Well, look, when you're putting new money to work now, Frank, I think it's a great time. And certainly for my clients, I'm looking at a lot of these commodity-oriented plays. The ratio of commodities to the S&P 500 on a valuation basis is about as cheap as it's ever been. So names like, for example, GLD, SLV, these are the funds that track a gold and silver, or DBA. This is another one that I like quite a bit. DBA is an interesting fund, Frank. It tracks an index of agricultural commodities, corn, wheat, and soybeans. That fund is broken out to a new 52-week high. And even something as seemingly pedestrian as an index of what are called master limited partnerships, MLP. The ticker symbol I like there is AMLP, and we'll put these all up on Twitter and threads for our listeners. But I think now is the time to really own some of those commodity-oriented names, energy-oriented names. And as we've talked about on previous broadcasts, during the 1970s, the inflationary 70s, energy and real estate were the only two sectors of stock sectors that actually made money. So I think now's a good time to consider commodities because gold's at its all-time high.
All right. In the meantime, consumers are still dealing with very high interest rates, which impact credit cards right now, pretty much the highest ever, with the Fed funds rate where it is. The Fed held steady on that one. And what about the impact of the Fed's indications here today at the consumer level and the effort to still tackle inflation by trying to slow the economy with the rates as high as they are?
What surprised me, Frank, is given how stretched the consumer is, given the fact he and she now, as you said, is facing that record credit card debt in terms of dollars, at the same time the interest rate is at a record debt, how strong so many of these retail stocks have been. I mean, the Gap, Frank, is up 180% in the last year. Same thing with Abercrombie and Fitch is up another 50% just this year. So consumers are still spending. They're spending more and more on their cards, even more. So I think that's a harbinger perhaps of a weaker economy because we simply don't have the savings that we did even a year or two ago to weather an economic storm. So bigger picture, that's what concerns me is people are becoming more and more stretched and more thin when it comes to actually having money in the bank.
All right, and the Fed chairman indicated there might be a little more tolerant of inflation since it is running hotter than the Fed's target. And what is your target for when they might start lowering rates?
Well, Frank, the name of my book, as you know, is Price is Primary. And, interest rates had already started to move higher for months before the Federal Reserve even talked about raising rates back to 3 and 4 years ago now. So I think you really want to keep an eye on interest rates in particular. And, when it comes to putting money to work, I think you've got to be very cautious. Again, I look at my economic history book, Frank, in the mid-1970s, as we've talked about, the assumption among top economists at the Fed and outside was that inflation was licked in 1974, 1975, and even 1976. Less than a year later, rates began to march ultimately higher. That took them higher by over 10 and even 12%. So I'm not a Cassandra, but the economy is like a huge steamship. It's like a huge aircraft carrier, and this trend towards higher inflation, I think, is borne out by everything from the gas pump to real estate prices to the price of gold, as we've talked about again and again.
All right, so today Apple making news with this report. Bloomberg reporting that the Justice Department may be going after it, Apple, as soon as tomorrow. What impact do you think that might have? We had been talking about the Magnificent Seven. Now we've been talking about the Magnificent One, and that is NVIDIA, but Apple's certainly part of that, the Magnificent Seven group. Give us your assessment of Apple and what could be happening tomorrow.
Well, bigger picture, I think you're seeing a changing of the guard, Frank. I mean, even before this news, Apple was down year to date. It doesn't mean it's a bad company, but, it's simply not leading as it had for quite some time. So you're seeing a lot of new names, smaller cap, value-oriented names, as you talked about some of the commodity-oriented names. And look, politically, this is terrible, and I think economically this is terrible. Think back to 1999. Microsoft was kind of like the Apple of the late 1990s. I mean, and their browser was, taking over the world. And in fact, that's what the Justice Department went after them for in 1999 and 2000. And, once the antitrust case was launched against Microsoft, Frank, it was over a decade before Microsoft again reached the price in the stock market where it had been. So, this depending on how much the Justice Department wants to take this could be a real long-term negative for Apple stock and shareholders.
All right, the other news coming off the strikes last year, the media names are back in focus, and now Paramount Global getting a big boost today. And if you saw that, pretty much topping the leaders list today, up about 12% on the day. There's reports that it's possibly going to be bought up here. What about Paramount Global and the media names at this point?
A lot of them have turned the course, and I think that kind of comes with what we've talked about a bit, Frank, is a little bit of a changing of the guard. I mean, these names had been really cast aside. I mean, it wasn't, maybe even 6 months or 8 months ago, people were basically making fun of Disney, which had been at the time dead money for years. And as value-oriented stocks come into focus, that means a lot of these media names, in fact, my favorite in the group is still, in fact, Disney. We own it over at capitalistic.com. It's obviously it's a Dow component at a time big cap stocks are doing quite well. And, you start to think, Frank, if they finally ultimately begin to go through with some of the divestitures, which have been talked about for many, many years now, these are tremendous companies and perhaps new synergies and new types of, opportunities to be unveiled. So Disney's my favorite in the group, but big picture, I think now is a great time to look off the radar screen. With all respect, NVIDIA, Microsoft, and Meta, wonderful companies. But even if you own the S&P, you're already talking about 10 or 15% of your portfolio. So look to some of the names, and Disney is my favorite in the media group.
All right. Any other specific places where you are putting money now and or taking off the table?
Yeah, sure. I mean, more than anything, it's get your financial house in order, Frank. I mean, no matter what the market's going to do, you always want to have that spending under control, 6 months worth of living expenses and credit card debt as much as you can under control. I mean, I'll give you one that probably is my favorite now, and I'm known for my exotic picks, Frank. And as I joked with Stuart Varney the other day, turns out that Africa is a continent. It's not just a song by Toto. And I learned a lot about that as I was investing in the Africa ETF. The ticker symbol is AFK. It's actually an index of African stocks, and it's up quite a bit these days. It's full of banks, which are doing quite well globally, and also a lot of resources company like gold miners. So it's an unusual deep value play, Frank, certainly off the radar screen. You always want to talk with your own financial advisor, but if you want to look at something that's non-correlated with Mag 7, Africa is about as exotic as it gets, and I do own it at Capitalist Pick.
I was going to play another Toto song, and that is Hold the Line, because the Fed held the line today on short-term interest rates. So that's what we usually pull out when the Fed does that. So we're on the same wavelength as always, Jonathan Honig, and so that is terrific. And anything else? What about small cap names here? Have they participated in this rally? And that's always a bullish sign as well. Any thoughts about going small?
Exactly. I mean, they're finally starting to wake up. And, look, you have to always think long-term, Frank, when it comes to markets. You have to be, looking 6 months out, a year out, 2 years out. But I think you can start to make the argument that, as we said, a shifting of the guard, and it's been such a small, narrow list of ultra-large stocks that have really been powering the market forward. But if this is anything like that period of, say, 2001 to 2010, that was a period in which small cap and emerging markets and international really outperformed. And as you might remember, Microsoft and Cisco were basically dead money. No one wanted them for quite some time. So VBR, that's Victor Boy Roger, VBR, that's an ETF. It's a plain Jane Vanguard small cap value fund. So these are small stocks that are, in effect, cheaper than the very expensive stocks. And these have been out of favor for quite some time, moving up the charts strongly, Frank. So this is one I think that you want to include as part of that diversified portfolio.
All right. Well, we see the stock market hitting record highs. We've seen the cryptos pull back. They had been on a tear, but now they go up, and we're reminded that they do go down. What are your thoughts on the crypto action lately?
The most interesting thing is, the argument about crypto being a hedge against a weak dollar. Over this incredible incredible rise it's had, Frank. To me, that's finally starting to become apparent. I mean, crypto seems to go up on the same days that the dollar tends to go down, and it doesn't mean that it's a perfect correlation. But a lot of us have been, fascinated that here's gold and crypto up near their all-time highs at the same time. I mean, look, given two things about crypto: the fact that most people own it, as we've talked about, not as a currency, as a speculation, and it's really what it is. And I think it's why you have to have, if you own crypto, have it as a reasonable size in your portfolio. Gold has always been highly valued at any point in history. Go back, they write about it in the Bible, for Pete's sake. Bitcoin, you can't say very much the same thing. So I think now is a great time to have some gold in your portfolio. And, Bitcoin, Frank, I just think, to me, I can find better places that I can understand these markets rather than chase names that have just had such unbelievable rises for so long.
Terrific, Jonathan. Well, thank you very much. We'll be looking for you with Stuart and team there at Fox News and Fox Business. Jonathan Honig, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, author of the book Price is Primary, How to Profit with Any Asset in Any Market in Any Time. Always appreciate your joining us here. Jonathan, thank you very much for taking the call here on this record-shattering day here on Mottek On Money and 790 KBC.
It's my pleasure and my honor. Frank, thank you, Frank.
Thanks a million. Thank you very much. And right out to the freeways now, 790 KBC. Friends, if you're hurt in an accident, you need an experienced advocate, and Clark Fielding and his team of sharks at Fielding Law are on standby, ready to dive into your case. My friend Clark the Shark is fearless for justice and your go-to attorney when injured in an accident that was not your fault. Whether it's a car accident, slip, trip, fall, or any kind of personal injury, Fielding Law is here to make sure you get the care, attention, and compensation you deserve. Fielding Law can assess the circumstances of the case, negotiate tenaciously with insurance companies, and if necessary, file a lawsuit and litigate to seek fair compensation on behalf of you, the injured party. An injury is a major disruption in your life. Medical expenses, lost wages, pain and suffering, property damage, and other losses incurred as a result of the injury are all part of the damages. Don't try and handle the process alone. You need an expert in the process, and the team at Fielding Law, the ones to trust. Put Clark Fielding's number in your phone under the word accident. That number's 833-88-SHARK. That's 833-88-SHARK, or go to clarkthesharklaw.com. Mottek On Money continues here. 790 KBC welcomes Dweezil Zappa coming to the Orpheum Theater on August 3rd. Tickets are on sale now at Ticketmaster.com. Right now, caller 9 wins at 1-888-790-5222. You get a pair of tickets to the show if you're caller 9. Call right now, 1-888-790-5222. Record-shattering day for the stock market today. The big news here, all three of the major averages are in record-high territory at the close. First time that's happened in several years. Well-fed rally today based on the comments from Fed Chairman Jerome Powell, who got the party started today on Wall Street. We see stock market moving sharply higher with the Dow 401 points, selling at 39,512. The S&P 500 moved up 46 at 5,225, and the NASDAQ up 203 points at 16,369. The yield in the 10-year note now at 4.27%. That's the one that impacts the fixed-rate mortgage rates, and we'll talk about mortgage rates and real estate shortly with Jeff Lazarson, the president of MortgageGrader.com, will be joining me live shortly. The price of gold also kissing record highs today, right now of about $34 at $2,195 an ounce. Crude oil futures pulling back a bit now, down $1.63 at $81.84 a barrel. Shares of Paramount Global on takeover speculation moving higher today, up nearly 12% at $12.51. Up $1.32 to $12.51 a share. And now the latest news for you right here on 790 KBC. Mottek On Money continues here on 790 KBC. Record-shattering day for the stock market. The capital markets on a roll. Will that translate to real estate? Of course, home prices here in Southern California seem to be hitting new highs. In the meantime, mortgage rates have come off of the recent all-time highs and have been ticking a bit higher lately. Today, looks like the yield in the 10-year note has eased a bit. That's the one that impacts the fixed-rate mortgage rates. The yield in the 10-year note now at 4.27%. Let's bring in our expert here. We have with us Jeff Lazarson, the president of MortgageGrader.com, also Orange County Register real estate columnist. Has been following all this for years with us here. Jeff, great to have you with us here this afternoon.
Thanks for having me, Frank.
All right. Give us an update on how the rates are looking here, first of all.
30-year fixed. Fannie Mae's 6 3/8% at one point. That's up to $766,550. 15-year fixed is 5 3/4% at one point, and the high balance for LA and Orange County, so that goes from $766,551 to $1,149,825. 6 5/8% at one point on the 15-year, and 6 3/4 on the 30-year. FHA VA is about 5 7/8% at one point, and jumbo is about 7%. So rates are still up there.
All right, and where do you see the rates go from here?
Well, I mean, based on what the Fed was talking about today, or Chairman Powell, three rate cuts later this year, I'm going to assume the mortgage rates are going to follow. I have a feeling it's gonna go lower faster though. I don't know. It's a weird market. A lot of people are doing extremely well, and a lot of people are really suffering. And I can't figure out what's what. You have a lot of more credit card delinquencies and auto loan delinquencies, and yet other people are just making money hand over fist. So I'm not sure which way it's going to give, but rates are definitely going to come down.
Very interesting. So it kind of reminds me of what happened back during on the eve of the financial crisis. I remember somebody stood up at a conference who said, we're in the middle of whatever it is we're in the middle of, and that was a pretty good way of putting it, because there wasn't an accurate label for it. There wasn't a recession, but kind of an uneasy feeling. So you brought back memories of those days. So, but in the meantime, prices seem to be hitting all-time highs here, right?
Yeah, and it is a very odd time, and the prices are just defying the market. Now there are a few parts of the country that I hear slowing down. South, West Florida, and I think the Austin area, Austin, Texas, I was reading about. But here, I was a couple weeks ago. I was out visiting open houses, and there was a little 2-bedroom condo in Laguna Niguel. listed for, I think it was like $825, and in 2 days or something, it had 14 offers, and I think the final price was somewhere around $860 where it landed at. And these are, the tiny properties. Just people are paying extraordinary money for them, and and I don't know where the end is in sight, because we still have a supply problem. I mean, we still have a big supply problem. Anything priced decently well is moving. There's just not a lot on the market. I think some stuff on the higher end is starting to slow down. At least I'm hearing that it's just they're just not moving the way they were. And of course, we got the big news about the realtor commission situation. That's going to be a huge game changer. The way people are going to be buying and selling houses. I think if you're looking to buy a place starting in July, they're not going to put the commissions on the multiple listing service, and so the buyers are probably more than likely just going to end up going to the listing agent. I just don't know how buyers agents are going to be able to make a living, because if the listing agent doesn't offer you a commission and it's not going to be posted on the system, you're going to have to call or something, then what's the point of the buyer's agent even working? I mean, and then of course trying to enforce a contract like that, an exclusive contract's another really harrowing thing. So I think a lot of realtors are going to be leaving the industry.
Right, of course. Thanks for mentioning that. The National Association of Realtors announcing it had reached about a $420 million settlement of claims brought by the home sellers in Missouri who originally brought this lawsuit. And this was, they had argued that commissions for member agents have been artificially inflated. So this is expected to affect the traditional 6% commission that is typically paid by the home seller and shared between the seller's agent and the buyer's agent. What is the buzz among the folks you talked to here in Southern California about the impact of the settlement?
Well, a lot of, I'm going to write about that this week in the Orange County Register column. A lot of people won't talk or are instructed not to, talk on the record about, what might be. I mean, the truth is, no, they don't know. It's everything is in flux. I mean, one is, does the judge approve the settlement? I would guess. But then the behind this is, the Department of Justice has another antitrust issue going with the National Association of Realtors, and so they, what are they going to do? Are they going to be okay with this, or are they going to, pound them even further? So I think the whole home buying process is really going to change, and I think you're only going to see listing agents, and I definitely think that commissions are going to get compressed, and it's complicated because these agreements are just long. I was talking to one realtor that he said he got an offer in, it was like 88 pages. I mean, just the amount of disclosures and stuff that they have to put in these offers. So it's daunting, for all concerned, and I don't know that it's going to change anything about home prices either. I'm not saying it's good or bad. I'm just saying it's, this is like a watershed moment in American history.
It is, and so from what I understand, the settlement has not been finalized. Could be finalized this summer, and what I understand is that the biggest impact will be the requirement of that written representation agreement between all buyers and agents, and the removal of the compensation offer on MLSs for buyers' agents. Obviously, everyone eager to get more information about this, Jeff, so appreciate your writing about it this weekend in your column in the Orange County Register. But, what's your gut feeling here? Should you try to do a deal before this is settled, the settlement is finalized, or should do deals?
Yeah, that's actually one of my recommendation is that if you can, get into something before this thing is settled as a buyer, it might be easier, because the listing agent, if they're double ending the deal, they're completely conflicted. I mean, a lot of states don't even allow the dual agency, and it's impossible to do the best for the seller and the best for the buyer at the same time. It's just you can't do it, and it's and then the listing agent is. There's a level of liability, another level of liability they're going to take on too. So I would just tell anybody, try and get your place bought before this summer, because you're probably going to end up having to hire an attorney or some third party to review your documents, because you're just probably not going to have somebody in the middle of the process that's really going to be able to look out after you. I just don't see the buyer's agents being viable anymore.
Jeff, thanks for that important update. Jeff Lazarson, president of MortgageGrader.com, based here in Orange County, also Orange County Registered Real Estate columnist. Jeff, thanks for the update, and look forward to talking again very soon.
Thanks, Frank. Take care.
All right, out to the freeways we go. Thanks a million, Jeff. Out to the freeways now, 790 KBC.
Mottek On Money continues here in 790 KBC, live at 4 o'clock on 790 KBC, streaming live online worldwide at KBC.com and the on-demand Mottek On Money podcast, KBC.com, Apple, iTunes, YouTube, and all your favorite podcast platforms. The national public interest law firm, the Pacific Legal Foundation, has sent a cease and desist letter to the Los Angeles Zoo for what the foundation says is the zoo's discriminatory hiring process because it discriminates against applicants based on race. Let's bring in Jack Brown now, attorney at the Pacific Legal Foundation. Jack Brown, thanks for taking the call here, and take it from the top. Tell us about your letter and where things stand at this point.
Well, Frank, thank you very much for having me on. It's good to be here. The Los Angeles Zoo has been discriminating against applicants on the basis of race in its paid internship program. It specifically limits its access to the program to applicants who identify as members of certain racial groups, and that's illegal under both the 14th Amendment's Equal Protection Clause as well as Article 1, Section 31 of the California Constitution.
Where do things stand at this point? I believe you were requesting a response by today, right? Did you get a response, and where do things stand at this point?
Well, so we requested a response by April 20th, so they have a month to respond. And
okay.
So it remains to be seen what the zoo is going to do, but if they don't cease and desist their illegal discrimination, they may find themselves the defendants in a constitutional lawsuit in the not-too-distant future.
How did this all come about? How did the LA Zoo get on your radar screen?
Well, we did some research, and we kind of came across it doing research. We're constantly on the lookout for illegal discrimination, because racial discrimination is both illegal and immoral. It's illegal because, like I said, it violates both the California and United States constitutions, and it's also immoral because it boils individuals down. It treats individuals as members of a racial group rather than as people, as individuals. It completely subsumes the individual into a kind of collectivist worldview where all that matters is their race. And I think that's wrong, and we think that's wrong at PLF.
And certainly Prop 209 has been on the books, since the 1990s, since 1996. I was here, of course, on the air back in those days as we reported ending state affirmative action programs, not only in education, but also for public employment and government contracting. So this has been on the books for some time. Are you seeing any other violations of this? As you say, you're constantly on the lookout for those violations.
That's correct. This is a violation of Prop 209 because Prop 209, or Article 1, Section 31 of the California Constitution, as it's more formally known, categorically prohibits racial discrimination. So even if the zoo can convincingly argue that it would survive strict scrutiny under the 14th Amendment, which I don't think it can. It's still illegal under Prop 209. But we have a number of cases challenging racial discrimination in public employment and public contracting as well. I just got back from San Francisco, where we did oral arguments in our challenge to Alameda County's racially discriminatory contracting program, where the Court of Appeals ruled that our challenge to Alameda's ongoing racial discrimination is not time barred by the statute of limitations. So we had a nice win there earlier today, and we're going to continue to fight for the equal rights of not just Californians, but everyone in the United States. No one should have to face racial discrimination.
What recourse do people have if they have, in fact, found themselves in a situation where Prop 209 has been violated at a potential employer?
I would encourage them to reach out to us at Pacific Legal Foundation. The website is www.pacificlegal.org. We're constantly on the lookout for people who have been harmed by this sort of stuff. And if you think you have a case, we have a case intake form that you can fill out on our website, and we'll be happy to take a look at any claims you think you have.
And what are the typical red flags in those situations that would cause someone to realize, wait a minute, this shouldn't be happening?
Well, like I alluded to, Prop 209 is an absolute bar on any kind of racial discrimination or preferential treatment on the basis of race, sex, color, ethnicity, or national origin in the areas of public employment, public contracting, and public education. So if you see a situation where the government is favoring certain racial groups in access to a contracting program or to an educational program, please do let us know, because we're very interested in tackling that.
Well, thank you very much for that important update. We'll check back with you around April 20th to see what happens with all this. That is Jack Brown, attorney at the Pacific Legal Foundation. Thank you very much for joining us live here on Mottek On Money on 790 KBC.
Thanks very much for having me on. Have a great day.
Thanks very much, and big day for the stock market today. The bulls and bears on the animals of Wall Street making news today as well, with the bulls taking control here. The Dow 401 points to 39,512. That is a record high for the Dow. The S&P 500 at 46 at 5,225. Also a record high. And the NASDAQ closed up 203 points, settling at 16,369. A trifecta, record highs across the board for all of the major stock market averages. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back tomorrow at 4 with Mottek On Money on 790 KBC.
Welcome to Talkville, the ultimate Smallville rewatch podcast. Let's get into season 4, episode 3, Facade. People get picked on. I got picked on. But Scabby, the whole school just hurt me. I felt like it wasn't real.
If I may, I want to defend the storytellers. The people who created the show wanted you to feel like these people were the worst people ever.
They pretty much said the whole school of Smallville High are bad people.
Jump in now or catch up on any of the past seasons of Talkville on YouTube or wherever you listen.